SoFi stock is looking extremely interesting to me at the moment. It's one that I used to consider speculative. They were young, without profitability, and their business was weighted too heavily into lending, which adds more risk during a weak economy. And all the meanwhile, they were trying to disrupt a massive finance and banking industry that I just wasn't 100% sure that they would actually succeed at. However, times have changed, guys, and this is a very different company that we're talking about now. That isn't to say that there aren't any issues. Notably, revenue growth is slowing down during what continues to be an extremely poor economy. However, the stock is trading incredibly low and even lower recently after falling around 20% coming off of Q2 earnings, leaving it also down over 30% this year and over 70% from their all-time highs. But I actually thought that earnings looked phenomenal. And I also think that the company, just kind of in general, is in a great position right now to turn things around long term and actually be a winning stock to invest in. It's just my opinion, of course, but here's why I feel this way. Now, first of all, we all know that the economy is struggling right now. And when it comes to financial companies, those always tend to get hit the worst during times like these, especially if interest rates continue to linger higher for longer, raising the risk of a recession hitting, which is one of the biggest concerns that investors have for SoFi. It's a very big part of their business, of course, revolves around lending. And during a recession, you see people default on their loans, not pay them back, credit ratings plummet. It's harder to find more quality customers to lend to. Businesses, of course, invest less on expansion and growth. And so it all just kind of creates a snowball effect of businesses and consumers just getting hit really hard. And that creates havoc for banks and financial institutions. But here's the thing, even during this weak economy, SoFi is actually performing and diversifying shockingly well as they continue to not only destroy analyst estimates with another 60% beat on EPS this latest quarter, but sales also rose by over 20% year over year, while the most important metrics of all, their profitability, more than doubled across the board. Net income up 136%, EPS up 116%, profit margins up 130%, and operating income up 132%. Guys, considering that people are just really not looking to make big new purchases right now, I think we kind of see that out there. Well, those numbers are extremely impressive for that challenging environment. I really feel like not a lot of people are going out there right now trying to buy a house or buy a car or take out some giant loan for some giant purchase when interest rates are so incredibly high and when inflation continues to also weigh on consumers by so much. Yet SoFi's all-in-one finance platform, it continues to grow and user counts continue to rise, and SoFi is finding new ways to sell products to them. In fact, they've been consistently adding more than 500,000 new members every single quarter at over 40% growth each one. And those new customers means more products and services that they can sell to them, which is driving up growth. And look, SoFi's revenue growth of around 20%, I personally think that that's really strong within the context of this being such a challenging environment. But in the past, it has been better. We, of course, had everything looking a little bit, the economy looking brighter. We had less inflation, lower interest rates. There were times of government stimulus. So of course, during those times, SoFi's top line growth was soaring through the roof. You're talking easily more than 50% growth, many times much more than that. But now it's a little bit lower. However, I feel that in this environment, the most important thing to focus on is actually to become profitable. And we've seen all year long companies that are not profitable take big punishment in the market. But with SoFi, well, they've actually posted positive net income profits in each of the past 3 quarters in a row. And that's a very good sign of them turning things around, because this used to be easily the biggest critique of SoFi was how much money they bleed and it's not being sustainable. And especially if the economy gets worse, how are they going to survive? Well, this is no longer the case. They're actually turning a profit consistently, and I do expect that to continue to be the case. But here's where things get really interesting for me, because this next part is really what I feel Wall Street is completely missing when it comes to SoFi's business. And that's that they continue to look at them as if they're just a traditional lender, which, to be fair, it is basically how they got started. And to this day, it does remain a very big part of their business. However, that's quickly changing, guys, as SoFi is now pushing much more heavily into financial services and technology, which are less capital intensive, they carry less risk, and overall they're more reliable with higher returns than traditional lending. And you can see that right there in the numbers, as lending isn't really growing at the moment, but the tech platform is up in the mid to high teens, while financial services is skyrocketing by over 80% growth. That's huge. And the two together, when combined, are now expected to make up around half of SoFi's entire business by year's end. This is a very big deal, guys. This is the future of SoFi, and as an investor, it is really what I want to see from them. It's exactly the transition that I want to see taking place, and that's what we have right now. Now, speaking about the future, of course, the other major concern from Wall Street, and the reason why the stock continues to sell off, in my opinion, is because of the macroeconomy and interest rates, the lingering risk of a recession, which, by the way, JP Morgan just raised their odds of a recession hitting later this year up to 35%, and it's even higher for next year at 45% too. But when looking at that, most economists and analysts now largely expect the Fed to start cutting rates in September. So, if that's enough, I should say, soon enough to fend off a recession, well, where exactly would that leave SoFi in a sinking rate environment? Not a rising rate environment, not a flat one, but a sinking interest rate environment. How would SoFi's business be affected by that? Well, in that scenario, I really can't see much of anything there other than upside for SoFi's entire business, because you'd likely get tons of refinancing across the board, home loans, student loans, people just wanting to get lower rates on their loans, which SoFi is a great option for doing that. And with all the users that they keep accumulating, it'll be really easy to target those potential customers with new products in their all-in-one, platform. On top of that, we'd probably also see a rise in stock investing. Now, whenever you lower interest rates, the yield from money markets and fixed income generally comes down. So people look to other assets to invest in, like stocks, for a greater return, and at least they'll increase the weight of them in their portfolio. So that would likely help SoFi's investing business too. And again, all of this is within the same platform. That's what I love about SoFi, the synergies, everything being available there. And on top of all of this, you'd probably also see a rise in the value of their existing fixed rate loans on SoFi's balance sheet, because investors would want those older loans that have higher yields compared to the newer ones coming out with the lower yields because of the lowering rates, right? So there's just a lot of ways that a sinking rate environment could not only help the economy, which helps many finance companies across the board, but I think it would also directly benefit SoFi in multiple ways, which again, this is all within the larger long-term context of the fintech market, especially probably being worth trillions of dollars in the future because of all the disruption, while SoFi is still just a tiny little player by comparison with lots of room to grow. And that's why when you calculate their very high profit growth of, sometimes more than doubling, right now it's like expected to more than double per year next couple of years, well, you end up with a 2026 forward P ratio of just 13. Obviously, that's looking a couple years ahead, right? But and of course, it's also assuming that things go well for them. But at these levels, I just think that that's very cheap for a company that is really just getting started, in my opinion. They have so much more to go, so much more to show, I feel. And so that's why I'm buying the stock right now. Again, though, as always, do your own research and make your own decisions. I'm only sharing with you my personal opinion. I own SoFi stock. I happen to like it. It's just my opinion. But, ultimately it comes down to how you feel about it. But I'd love to hear your thoughts. Let me know down below. Even if you hate it, if you think it's a horrible stock, I'd love to hear those opinions. So let me know down in the comment section. Or if you own it, let me know that as well. But yeah, I think that'll just about do it for this video. Just wanted to give you a quick update on SoFi, why I like it at these levels. But I hope you're all doing well, my friends. And I will catch you in the next video. All right. Take care, everybody. Bye-bye.